negative profit percentage, what it actually is, why it's bad, and how to fix it. A lot of people that have come through the Cash Rich Business Workshop and have done a profit instant assessment on their own business have come up and actually gone, oh no, I've got a negative profit percentage, and gone, oh look, it's okay, like it's just business. But that's not the case, and I want to show you why that's not the case today. First thing we're going to do is just look at the Cash Rich Business Workshop, what it means, or sort of what it's based on. I'm going to try and do that in like 2 minutes for you guys, and then we'll jump into the negative profit percentage real quick. So the first thing is essentially what you need to know about the Cash Rich Business Workshop, or the thinking behind the Cash Rich Business mentality, is that it revolves around the belief that the normal profit formula is incorrect. What I mean when I say that is your normal profit formula is revenue minus expenses equals profit. And that works on paper, that's correct. But from a cash rich business perspective, we believe that that doesn't work. The reason we believe that is because of this economic principle called Parkinsons Law. Parkinsons Law says that any available resource will be used up to its fullest. If it's there, you'll finish it. If you've served up a plate of food, you'll eat right until the end. You won't stop halfway when you're full. It's there, you'll finish it. So because of this law and because it's in play, the same thing happens when you've got a certain amount of income from your business. Eventually your business expenses will work its way up until it matches that available resource. Effectively, your profit is then going to go down. So the CRB, the cash rich business mentality says to counteract that, we work out of 5 main accounts. So the first one is your in account, and then you've got your 4 operating accounts, or your 4 different purposes for money in a business bank account. First one being your profit, second one is owner's pay, third one is tax, and your last one is your operational expenses. Now, that's the Cash Rich Business Workshop. That's how we believe you should run it. What we're going to talk about today is purely sort of the profit section and what it looks like when you have a negative profit percentage. A lot of you guys that went to the Cash Rich Business Workshop or will know rather, that when we started our journey, we were actually at minus 17% profit, which is crazy bad, not good. For today's example, I'm going to go with minus 15%, just to make the numbers a little bit easier. So the first thing is, what does a negative profit percentage look like? A plain example is, if your business has $10,000 a week coming in, so walking into the front door, that's what those little arrows show. So that's from sales to customers or whatever else. A negative 15 profit percentage means that you're actually spending 115% of that. So the first time I did the Cash Rich Business Workshop, I thought negative profit percentage, okay, so I must just be spending other things here and not allocating for profit. But it's actually more than that. It's not just you're allocating incorrectly, it's actually you're spending more than you should be. That you're spending more than you've got coming in. So that means, practically, you've got in those 3 accounts, or from those 3 purposes, instead of spending that $10,000, you're spending $11,500 or $1,500 more than you should actually be spending. $1,500 more than you've got to spend. So that's what a negative profit percentage looks like in practice. Why is it bad? That $1,500, because it's not coming from the business income, it's coming from outside sources. So that might be loans from friends and family, it might be personal loans, credit cards, or your own savings. Okay, so pretending this is your own business, you've got that $10,000 coming in a month with those expenses regularly going out. You might have $10,000 saved up in the bank. That's for holidays, for medical emergencies, for school fees, whatever else. That's your sort of at-home buffer. You've also got a credit card that you know you can take up to a limit of another $2,500 should you need to. And absolute worst case scenario, you know you can call your mum or dad or someone to bail you out with an extra $2,500. Meaning that outside of your normal business income, outside of your business cash reserves, which in this case doesn't look like you have any anyway, you've got access to about $15,000 should things go wrong. Why the negative profit percentage is so bad is because it actually practically means that you have a set amount of days or set amount of weeks that you can keep functioning before everything runs out. What I mean by that is, working on this example, spending the $1,500 a week more than you actually have, coming from your reserves, from your credit cards, from friends, families, other family friends of yours, that eventually is going to be used up. The way to calculate that is simply that $15,000 that you've got extra access to, divided by the $1,500 extra that you're spending. That means if your business keeps operating the way that it is, you keep overspending the way that you are, you've only got 10 weeks remaining in business before it's all over. That means, regardless of anything here not being able to get paid, you're not going to have extra funds to access to keep the business running, to keep your family going, and you're going to have depleted all of your savings, as well as gone $5,000 into debt somewhere else. So it's not a place where you want to be. The reason I'm saying all of this is to get you to take action. If you're at a negative profit percentage, chances are, more likely than not, you're spending more money on your operational expenses than you should be. 9 out of 10 times, that's where business owners find they're maybe doing something that they shouldn't be. Where costs need to be cut from is normally your operational expenses. Cool, so that's why a negative profit percentage is bad. The way to fix it is to start cutting expenses. If you've been to the Cash Rich Business Workshop, you'll know this model. You'll know the two principles that we've given in relation to cutting expenses, what you should cut, what you shouldn't cut, what you should keep happening. If not, if you've got any other questions, keep commenting below. I'm going to be doing a video in the next couple of weeks about this part, cutting those expenses and keeping them down.